What's going on, you fellow real estate moguls? It's your bro here, Ryan.
And Taylor.
In today's video, we're going to talk about housing affordability, but more importantly, one option to maybe make housing way more affordable. But is it the right option for you? Let's find out in this video.
Stop wasting money on that dumb shit and instead put it in investment. I know it's tempting to spend it and be broke again.
So what is this magical thing we're talking about? Well, today we're going to be talking about the 40-year mortgage.
What's that?
Yeah, everyone's heard about their classic 30, and maybe some people have heard about a 15-year mortgage, but this one just goes a little bit beyond that and is obviously 40 years. You pay off the loan over 4 decades.
When you say it like that, 4 decades, that makes it a little bit daunting.
Yeah.
Just 30 to 40 years, you're like, okay, that's not that big a difference, but 4 decades, it makes it seem like a big deal. So now 30-year mortgages are one of the most common mortgages out there. So what we're going to do is we're going to compare the 30 versus 40. Honestly, for the most part, you can guess, but we'll go through just so it's a little bit more obvious and show you exactly what we're talking about. So jumping right into it, some of the trade-offs, looking at the monthly payments. So with a 30-year mortgage, you have higher monthly payments. With a 40-year, you have lower monthly payments. This not only helps with ongoing affordability, but the initial upfront affordability is also a little bit more helpful because you can qualify for a larger mortgage because the payments are lower. So your $400,000 house, you're trying to break up 15 or 30-year payments. Now making it 40-year payments, again, makes that payment smaller, meaning you can afford more of the house because that payment is so much smaller. Within reason, obviously, they're going to do all the calculation and it depends on your debt and a lot of other factors. But just looking at everything equal, 30 versus 40, smaller payments, you can afford bigger, or you can just make it easier on yourself and not be house poor. With a 30-year, your interest rate is usually lower. You usually have a lower total interest. With a 40-year mortgage, more interest paid over time.
So you will pay more in interest over the life of the loan. You know, a longer term, you're paying interest for a longer time. It makes a little bit of sense there, but it's not something that a lot of people consider because a longer repayment means more interest accrues. On top of that, you are building equity slower. That also might be a little common sense there, but maybe something that people are like, oh, I didn't even think about it in that sense. So you got to consider that it's going to be taking you longer to build equity in the home because those payments are smaller.
Yeah, and both of those make sense. It's kind of up to you if that's a big drawback or not. If you plan to live in a house for, say, 5 years and you know you're going to move somewhere else in that 5 years for whatever reason, job relocation, something along those lines, maybe it doesn't make a lot of sense to own that home because by the time you put all the down payment, the closing costs, all of that, and then you're saying, I'm going to earn equity slower. By the time that 5 years comes around, you really haven't earned anything. And you're going to, by the time you sell it, the fees and all of that, you're going to lose money. So maybe that's not worth it in your style. Or that interest is so high, interest rates, that drawing it out even longer, you're going to owe so much that it's quite insane if you do the math and look at same price home, 30 versus 40. It will blow your mind how much more interest will add on top. Lastly, lender availability. 30-year mortgages being the most common, they're widely accepted, widely available. So almost pretty much every lender out there offers a 30-year mortgage.
Yeah.
However, a 40-year mortgage is considered not qualified mortgage, so that means there's less or fewer lender options available.
So yeah, qualified mortgages are limited to 30-year terms or less, and then the non-qualified can be greater than that, so the 40-year term would obviously fit into that category. So these non-qualified mortgages do have some unfavorable features like negative amortization, which means minimum payments without reducing the loan balance, and balloon payments, with that just being a large lump sum payment during the loan term. And a lot of people don't like doing that kind of payment. So that is something that you have to consider and see if it actually fits within your budget and your style.
And as we say with almost all the videos we ever have, it's all based on your personal finance, your personal situation. So don't just take this advice and run with it. Definitely speak to someone that's qualified. Speak to a lender, obviously. Talk about your personal debt. Go through the whole process with them and ask them, is a 40-year mortgage something you offer? It is. Do you think that would work in our situation? They're the expert. This is just for educational purposes. This is not financial advice by any means. So please talk to a professional or an expert in the field. Every time I'm doing anything, I lean on the expert. If I'm getting plumbing done and they go, what do you want to do here? I'm like, never done any plumbing in my life. I'll go with whatever you recommend. That's reasonable, obviously, price-wise, because they're the experts. Same thing with the lender. I usually ask them a ton of questions, including What are all the options you have when it comes to lending? Okay, 40-year, that's interesting. I haven't heard. What are the goods and bads? Can you give me the summary? So that's definitely a good thing you can do in that situation. But we hope you guys got value out of this video. If you learned anything new at all, please like this video. Please comment below. Oh, I love your videos. We'd love to see that. And we'll see you guys in the next one.
Stop wasting money on that dumb shit and instead put it in investment. I know it's tempting. You'll spend it and be broke again.